Okay, so let me share the screen, and which guy just confirm me whether my screen is visible or not. Okay. Hope it is visible. Okay, thank you. Okay, so let's start from the introduction. Okay, and so let's start from what is trading. So everybody trades. We all are trader, and we want to be a successful and profitable trader. So it's very hard, to be honest. It's not that easy. And why it is hard? Because there are a lot of reasons, but because it's a zero sum game, everybody cannot win. Okay. uh, so if you win, it might that someone have lost their money and they have transferred their money to you. Okay, that's why you won. So basically it's a zero sum game. And the next thing is that it's a game of probability. So whatever you concepts we are gonna learn, it will work on the basis of probability. It's not gonna work 100% all the time. So we have to play the game in such a way that the probability of getting success is higher. Okay, so higher the probability, then better it is. That's why it's a game of probability and uncertainty. So you always embrace uncertainty. If you think, if don't cry or don't beat yourself when trade doesn't go in your favor, when plan doesn't play out. It's going to happen. If okay, even you learn from me, anyone else. Okay, if they claim themselves that they have 100% win rate or whatever they are claiming, all these things are bullshit. That's why it's so keep in mind it's a game of probability. Whatever we are gonna learn, okay, from today's session to the last session till the end, there will be certain time when things will not work in a favor. At that moment of time, you have to step back and you have to wait for the right moment. Okay, that's why I'm saying it's a game of probability and uncertainty. So you have to embrace uncertainty. Next important point is that 90% trader loses, right? But you guys know that all these traders are human beings. They are normal human beings. They have legs, they have eyes, they have all the body parts, right? They have the same brain that we have. But why they lose? Because they are doing what others are doing. So to get success, you have to do something different from what they are doing, right? So let me before we start the actual topic, I'll just give you the brief idea what others do, right? And I will suggest you to not to follow them. Okay. Okay, the next, so see, all the 90% traders are normal human beings. They have well-functioning body and mind. Okay, so in order to get success, we have to do what 90% are not doing. Okay, so what 90% are doing? First, let me give you the idea what 90% are doing. 90% of the traders are on X, are on YouTube, are on Discord groups, Telegram groups. They are all are on social media. They are just showcasing their profits, demo profits. So what happens now? What happens that you get confused. There is so much misinformation out there on internet. So you'll get confused. You'll doubt yourself that whether what I'm doing is right or wrong. Okay, maybe you are doing right, but still you will doubt because you see someone getting 10 hours, but after working hard, after sitting 10 hours on your days, still you got 2 hours. So you just even you win, you'll cry, right? So you just so that's why I'm saying do not be on social media if you want to be a good trader. Be on social media if you want to be, but limit yourself, right? Do not be on 24 hours all the time. Okay, just follow bunch of traders, handful number of traders. Do not follow everyone you see because it will create chaos and confusion in your mind. And so confusion, if your mind is in confusion, then there's no possibility that you will get success, right? So you have to do what 90% are not doing. So 90% of the traders are on social media, are on X. So limit yourself from social media. Next important point are they is that everyone brag about their profits. Everyone showcase their profits, showcase how they're good at that. But this is not a competition. Do not compete with anyone else. It's everyone has their own journey. So you have to celebrate your own journey, right? Do not compare yourself with anyone else. Maybe your maybe you started 10 days back, but he is trading since last 5 years. So there is a lot of difference between you and him. Do not compare yourself with anyone else. The third important point to keep in mind is that, you know, the third important point you have to keep in mind that you have to stick to one strategy. Do not jump from one strategy to different strategy. It's very easy to say, but it's very hard to control yourself, because you see someone is getting a lot of winning trades from that strategy, but you just hop on. So do not do this. Just stick to one. Do not marry different strategy. Just get only married to a single strategy and focus on it. Give all your blood, sweat, and tears to that strategy. Do not jump. Okay. So whatever I'm teaching, whatever you're gonna learn it's totally working, and it will work forever. Okay. Maybe there will be slight changes in the market dynamics, but still it will work forever. You have to control yourself. You have to be patient. You have to be disciplined. Okay. There are multiple chances. There are multiple times it will come. You'll be right all the time, but maybe you'll not get the entry. It's okay, right? So you have to embrace all those uncertainty, right? I hope this basic things are clear, right? Because you have to. I'm just telling you, because you have to keep these things in your mind before we get into this session, right? Else you will have the false expectation. Now let's move to the different the actual topic, right? Today we're going to learn about the order flow, and this is the most important part of the trading any market you say. Okay. And what do you mean by the order flow? Order flow is basically means the direction means in which direction the higher time frame that is in basically the trend of the market. Okay. And whenever we talk about the trends, we should always think in terms of higher time frame. Okay. So order flow basically we'll always talk about the higher time frame order flow. We do not talk about the 1 minute and 5 minute order flow. Okay. So order flow basically means the trend of the market. Okay, in which direction the market is moving. Okay. Now let's and we always talk this order flow in terms of higher time frame only. Now let's get back to the next slide. That how do we identify the order flow? How do we probe the order flow? Okay, how to have the actual understanding of the order flow? So we are gonna using these three method. Okay, to understand order flow. The first method is rejecting highs and lows, breaking highs and lows, or the second method is using intermediate term highs and lows, and the third method is PDRS, which is being respected and disrespected. These three methods we are going to use. First I will explain this method, again this, and we'll learn at the end and how can we club all these methods together to have a better understanding of the market. Now let's understand. Before, look, in the first point, what I have written is that this is rejecting highs and lows, breaking highs and lows. So before we get into this first method, let me first explain you what I actually mean by rejecting, right? Because this is a very important word to keep in mind, rejecting, right? Now come back. So let us understand what is rejection first before we get into the first method. Rejection means fails to expand above highs and below lows, right? So whenever you see a low here, see there is a low here, but price fails to expand below this lows. That is what I mean by rejection. Here you see there is a high, but price fails to expand above that high. This is what I call rejection. So it's pretty simple. Whenever price fails to expand above highs or below lows, then we can say that there is a rejection. Okay. Now you guys will come across, you will wonder that maybe there are different types of rejection you will come across in the market. Okay. So you see what are the different types of rejection you'll see. First of all, you'll see that whenever price, what will happen, that price will go below lows, it will close. See, there are multiple closing below these lows, right? Price close below these lows, and again price move higher. So this is also a one type of rejection. Price closed below these lows, and again it got rejected. Okay. Next point is price wick. It wicked below these lows, and again it rejected price move higher. And here you see there's a swing high here, and price consolidated above this, and again move lower. So these all are, these all can be the type of rejection. Maybe I can explain you much more better in the charts. So what I'm saying is that whenever you see a low or high, let's take an example of a low. So price can reject in many ways. Price can wick below this low and move higher. Second, price can close. There can be a closed of a body, and price can move higher. And price, and there's one more possibility. Price can also consolidate here, and it can move higher. So these three can happen. You do not have to predict what is going to happen. Okay, you do not have to predict it's going wicking, or it's body closing, or it is consolidating. You do not have to predict this. You just have to anticipate this, that whether price is that this low is going to be rejected. That's your concern, right? Now let's back to the topic. Right, you got the idea that whenever price you will come across these three types of rejection in the market. Now let's move. Okay, so now this is a very important point, right? Basically, rejection means turtle soup, or false breakout, or stop hunt. This is pretty easy what I'm actually saying here, because this first session is about order flow, but you will have the a good idea about what actually turtle soup is, what actually false breakout is. How do we anticipate this false breakout beforehand, not hindsight, beforehand, right? So whenever I talk about rejection, basically it's a turtle soup, right? Price move higher. It can be a false breakout. There are different names of it, right? People call out with different names, but basically the concept is basically same. Price moved lower, but it fails to do so. So these all are rejection. Okay, and in simple retail terms, it will look like a W and M pattern. Okay, so this can be, so these all are the W pattern or M pattern, but to be precise, it's rejection or turtle soup or false breakout or stop hunt. So these can be all the names you will see, and people will try to sell courses on the basis of it. But basically, all these things are pretty much same. Okay, there's no such difference between these things. Okay, let's move on. Now, in the first type, you saw that there's a term called rejection, and there's also a term called breaking. Okay, so before I explain the first sentence, I have already explained what is rejection. Now I'm going to teach you what is break, right? So then we will club those two things, and then we'll have the better understanding of the first order flow, type of order flow. So see this. So now let us understand what is breaking. So breaking means it closed and it expanded above highs or below lows. Right? It is very very easy and pretty like straightforward, right? What I actually mean that price will break below lows. So it got broke, right? And it expanded below lows, right? Again, you see, price broke and it got expanded. So this is what I mean by break. So whenever I explain what I mean by breaking, let me erase these drawings and I'll explain here. See this. What I actually mean that breaking means price will, let's say this is a swing high, so price will break. Okay, it will break like this, and it will expand higher. No, it will expand higher, and then it will come in a rounded format, and it will retest this high. So basically, this is, and you will see most of the time you will see there will be a fair value gap here. This is one gem. You can write it down, but do not make notes right now. You can make it whenever you watch the recording. Okay, so yeah, so breaking means what? Price will close above the highs and it will expand above highs, right? Or it will close below these lows and it will expand below lows, right? This is what I mean by breaking. Okay, it should not consolidate, it should not wick, it should not come down immediately, right? These all are the important points to keep in mind. See, in all these examples, price broke and it expanded. Here also it broke and it got expanded. This is what I mean by rejection. Hope everyone is clear right now. If you guys are not clear, just let me know that everything is all right. You got to know what I'm trying to say, right? What I actually mean by rejection or breaking. All right. Hello.
Yes, sir.
Okay, then let's proceed. Okay, let's proceed. And I just reopened the general topic. So if you have any doubts, you can just text me there. Okay, and I'll just clear all the doubts. Okay, let's move on then. Okay, so see, this is how retail see the higher time frame trends on order flow like this. Whenever you see, retail traders, not we all are retail, but this is where we started trading, right? So what do we know that whenever price makes a higher high, higher low, higher high, higher low, higher high, higher low, so it means what? The order flow is bullish. And when you see price is making lower low, lower high, lower low, lower high, lower low, lower high, so it means what? The order flow is bearish, right? This is what we know. This is what everybody knows. This is what all the 90% traders knows. But today we are going to learn something different, right? To understand the trend or the order flow of the market. So what are we going to learn? We're going to learn about the first method today. The first method is rejecting highs. We know what actually mean by rejecting, and we also know what I mean by breaking, right? So whenever you see price is rejecting highs and breaking lows, it means what? The order flow is bearish, right? So you see here, this is a trend. We are in bearish trend. Okay, so there is a high. A price rejected this high. Again, price forms a high. It rejected this high, and it eventually it is breaking this lows as well. See, it's breaking this lows as well. So here also price rejected this high and it broke this low. So whenever you see in the chart, in any time frame, if you go and see in any time frame, whatever we are going to learn today is it's fractal. It's not about the only higher time frame. You can see this thing happening in 1 hour time frame, 5 minute time frame, daily time frame, weekly time frame, monthly time frame, whatever your time frame you are comfortable with. You will see that price does the same thing again and again, again and again. What it do? It actually go above high and it will reject the high. And basically, this is what I actually mean by turtle soup. See here, price it will go above high and it will reject the high. Goes above high, it will reject the high. Okay, so and it break the lows. See, so whenever you see price is rejecting highs, breaking lows, rejecting high, breaking lows, it means what? The order flow is bearish. Now let's move to the bullish. Bullish just opposite of what I taught. It will reject the low. Okay, it will reject the low and it will break the high. Right? It broke the high. It will reject the low and it will break the high. Right? It is pretty simple. Now let's move to the important point. Okay, the important point is that there can be many lows and highs in the market, but how do we know that which highs and lows is going to price reject? Right, that's the important point to keep in mind, because we're not gonna go and see any random highs and lows, go and mark any random highs and lows, and we expect it to get rejected, right? No. So what I'm actually saying here is that 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 you're not gonna go and mark any random highs and lows and think that it is going to get rejected. So that's why there you must be wondering then which highs and lows price is going to reject. This is the important part to keep in mind, because this is what the foundation of turtle soup or the false breakout begins with here. So which highs and lows price can reject? So whenever you see highs in premium or lows in discount, it's going to get rejected, right? So what I actually mean, let me explain here. So the first point, what I actually mean is that, okay, let me just a sec. Okay, now it's all right. Okay, see, so everybody knows what actually premium and discount is, because this is basic concept. Let's say this is premium, okay, and this is discount. You know that the order flow is bearish. Okay, so whenever you see the order flow is bearish and price is moving like this, so whenever price retraces, so it will reject the highs which is in premium. So price will move higher. You see there's a high here, there's a high here. Okay, so price can reject both of this. I'll teach you which one, but for the sake of understanding, let's see. Price rejected this high and it moved higher. Again you draw a premium and discount from this high to low, right? And but price will go, if see in this leg there is no high, so what price will do, price will create a high and then it will move higher and it will reject the high, right? This is all the important point. Now come here. So whenever you see highs in premium or lows in discount, so if you know the order flow is bullish, like this price is moving higher, so what will happen whenever you see a low which is in discount, so price will go and reject this low and move higher, right? It is pretty easy, it is straightforward. Okay, now let's move ahead. Now the second important point, highs and lows of FBC or at FBC. Okay, so what I actually mean here, okay, let me show some examples here. First point, examples here. So highs in premium and lows in discount. But actually, so say this is, so you can see here that there is a high here, there is a low here, and this is premium and this is discount. Okay, what happened? Price went above, price created a swing high, retraces, and it get rejected. Right? Where it rejected? At the key level. Right. So this is what you will. This is what I mean. Highs in premium and lows in discount. Let me go to the next example. The next is that highs and lows which of FBC or at FBC. Right. See this. What I actually mean. See. When a price expand higher, it will create a fair value gap. So let's say there is a fair value gap here. Okay. So you will come across that there will be a price will create a low just above the fair value gap, right? And it will reject this fair value gap. Very simple. This is what high rejection means, right? So these lows, the lows which are at FD fair value gap, the lows which is above or below the fair value gaps, these lows and highs can be rejected, or it is mostly rejected. Okay, this is where you can anticipate turtle soup, right? Now let's come back. See here in this point, price move lower, there is a fair value gap here, price created a swing high here and it got rejected inside a fair value gap and we moved lower. In this example you will see that there was no fair value gap, there was no, so there is also a swing point here. Okay, there is a swing low, there is a swing high, price created a fair swing low here and it got rejected where inside a fair value gap, right? And we moved higher. So in the first method we learned about whenever price reject highs and break lows, we are bearish. Whenever price reject low and break high, we are bullish, right? Now also I taught you that which highs and lows price is going to reject. Highs and lows of fair value gaps or at fair value gaps, or highs in premium, lows in discount, or highs and lows at higher time frame key level. This is also important point. Let me explain you. Now let us dissect this price action, right? This one. This is the example of this point. Highs and lows at fair value gap. Okay. Or highs and lows of fair value gap. See, of fair value gap. So this is a fair value gap. Okay, this is a fair value gap. And if you look carefully, let me move all the times. If you look carefully, this fair value gap doesn't have a swing low. It has here. Okay, but if you see here, this fair value gap doesn't have a fair value gap swing low. But if you go to the lower time frame, see this. If you go to the lower time frame, you will find a swing low here. And what happens? Price rejected the swing low and moved higher, right? So if you see a good fair value gap like this, right, and suppose let's say this is a fair value gap in 1 day time frame, right? But if you go to the 4-hour time frame, you will find a swing low just at the fair value gap like this. So it is going to get rejected for sure. This is what I actually mean by highs and lows of the fair value gap is gonna go and reject, right? Hope everything is clear. Now see this. The next important is highs and lows at this trade. This trade I actually took and I explained on in the Telegram as well. See this. Price expanded lower. Okay, there is a swing high here, and there is a key level. This is the order block. We will learn about key levels in the upcoming sessions, but as of now, this is the order block, and there is a swing high just below it. So what you saw? Price rejected this. Price tapped this higher time frame key level, and we got, and the price rejected, and we moved lower, right? So now you understood. So whenever I talk about that price rejecting highs and lows, okay, this one rejecting highs and lows and breaking highs and lows, you know that which highs and lows I'm talking about, right? Highs and lows of at the key level, highs and lows in highs and lows of premium and discount, highs and lows of fair value gaps, or highs and lows at fair value gaps. These are all highs and lows I'm talking about. So whenever I talk about rejecting highs and lows, breaking highs and low, this is what I actually mean. Okay. Now I will go to the chart and I will explain on the chart that how do we look for the order flow. There we go. This is the bullish order flow example. You see that price is moving higher, right? The order flow is bullish. But how do we know the order flow is bullish? See this. See this price is moving higher. But how it is moving? See, there is a fair value gap, right? And price rejected this fair value gap and moved higher. Again, price formed a swing low, right? It came back and it rejected this low and it moved higher, right? So this is what is happening. Price is rejecting lows, right? And it is breaking highs and also creating fair value gaps at highs. See, price broke the high and it also created a fair value gap at the high. Okay, whatever point I'm telling, just keep in mind. These are all the important points. See, sorry. See, price broke the high, it expanded higher, right? And it came down, and see there is a swing low here. Price rejected the swing low, and again it moved higher, right? It moved higher. Again, price came down, it rejected this low, and it moved higher. Also, it rejected this low and moved higher. Price came down, formed a swing low, and again it rejected this low and moved higher. This is how actually price moves. Okay, sometimes there will be a low swing highs and lows. Sometimes price will create swing highs and lows, and then it will reject the highs and lows. Okay, and whenever you see price is doing this thing, rejecting lows and breaking highs, it means what? The order flow is bullish, and the most ideal trade which you will gonna take should be in the direction of the order flow. Okay. See the example of the bearish order flow. Same thing again. Price is coming down. It is fair value gap, creating a fair value gap and rejecting highs and lows at the fair value gap. Moving down. See, it is also rejecting this high, right? And it moved lower, broke the low. Again, it created a swing high here. It got rejected here. Then we moved lower. Again, it rejected this. There is a fair value gap. Price rejected this fair value gap. We move lower again. There's a swing high here. Price retraces and it rejected this swing high, and we move lower. You see what is happening actually? That price is rejecting highs, right, and breaking lows. Rejecting highs and breaking lows. And if you see, all these highs are in premium. Okay, mostly you will see that all these highs are in premium, and also if you see, some of these highs are in fair value gap, right? So this is a fair value gap, and there is a high in fair value gap. It got rejected. They see this is a fair value gap, and there is a, so if you go to the lower time frame, you will see there will be a swing high here. That's why we got rejected here. See, again you see here is a fair value gap. There is a high here, and it got rejected. Okay, again you see the high got rejected here. So now you got to know that highs and lows at the fair value gap, near the fair value gap, in the fair value gap, or highs and lows in premium and discount is likely to get rejected. And this is pretty easy. Now you got to know that from this point, you got to know that where turtle soup is going to happen. This all are the turtle soup, right? All are the fake breakout. You're expecting price to break above this high, but it fails to do so. Here again, it looks like it is strong breakout above the high, but it fails to do so. This is how you can anticipate turtle soup. Pretty easy. It comes with practice, because I have practiced it, I have backtested, I have seen enough time, then it comes natural to me. But for you have to practice it, right? This is how, see, you can easily anticipate it. You have to tape read it. We're gonna do live session, don't worry. But as of now, you have to keep in mind that how to look for the order flow. Now I got to know that how do we look for the order flow, bullish order flow, bearish order flow. So whenever you take a trade, this should be your first step, right? You go to your chart and look for the order flow. That what is the order flow in 4-hour time frame, daily time frame. So try to take the trade in the direction of the order flow. Okay. Now let's move ahead. Now, okay, before getting into second method, let me just explain you the first method on the chart. Okay, let me take some examples of any pair. Let's take gold. And let's go to 4-hour time frame. I guess 4-hour time frame is good. There is a, just a sec. You can use this one. This one is also good to explain. See this one. Let me explain this. See this one. How actual price is moving, right? Price rejected this low, okay, and it moved higher. Okay, it broke the high, right? It broke the high. Again, it rejected the low here, but its price did not came to the premium, right? It did not came to the premium. It okay. Sometimes price can be extremely bullish and it will not come to the premium. So you have to embrace that thing. No issue, right? Again, it broke the high, and the price there's a swing low here. It rejected the swing low here. Again, it moved higher. See, there's a fair value gap which is in premium, right? See here. Let me use this tool. Now come back. This is going to be amazing. See this. So here, what you saw, that price rejected the low, broke the high, rejected the low, broke the high. So let's say you come to the chart and you saw this price action, right? You saw this price action. What will you do? First step, what you will do? You will just see. Okay, I can see the price is rejecting lows and breaking high. Rejecting low, price is rejecting low, breaking high. It means what? The order flow is bullish. So in which direction I am gonna take the trade? In bullish direction, right? So which is the ideal PD array which I will look for? I will let you know. But now for me, this is my ideal PD array which I will look for price to continue higher, right? What happened? Price broke this low, broke the high. Do we have any swing highs and lows where price can reject? Yes, we have here. So maybe what can happen? Price will come, it will reject this low, and it will tap this high, and it will move higher. Right? This can be your anticipation. This is how you anticipate. Right? Again, it moved higher, no issue. It will come to this point, and you see this before tapping the actual. Okay. Before getting tapped, it just created a swing low here. Okay, let me draw it nicer. Before just a minor swing low, right? And it will move higher. Right? This is pretty. This is how people get trapped. Now this is the ideal swing low, and it got rejected. This price got rejected. Okay, and we moved higher. Okay, right. So this is how you look for the order flow. Whenever you see price rejecting low, breaking high, rejecting low, breaking high, rejecting low, breaking high, it means the order flow is bullish. And where you take the trade? We'll take a trade in the direction of the order flow. Okay, pretty simple. Now let's move to the okay, let me explain one more example so that will get easy. See here, this is also like this is also, if you see, it got rejected, high got rejected here, right? We moved lower, again we see price got rejected, high, lower, higher, and we moved lower. Okay, and for the first time what you saw, sorry, for the first time what you saw, price rejected its low and moved higher. Right. So the order flow becomes bullish, bullish. Uh, so whenever you see, there's one important point I forgot to tell. Whenever you see price rejecting lows and highs at the same time, it means what? The order flow, the market is in consolidation, right? So you see, price is rejecting the low and also rejecting the high, rejecting the low, rejecting the high. So that means what? The order flow is the market is in consolidation, right? It is rejecting lows, and also rejecting highs as well. So it means what? The order. And this is the scenario where you can see the order flow is consolidation. Okay, let's move ahead because the session is a lot of things to cover. Now the first method is already done, right? We're gonna learn about the second method. That how to, this first method is pretty easy. We're also gonna use second method, which is very important. Okay. See, using intermediate term highs and lows, right? ICT taught intermediate term highs and lows in a different way, but I use in a different way. So it depends, because this is what I found, that this is the best way to use intermediate term highs and lows, like with specific rules. Okay, I'm not gonna go and randomly mark any intermediate term highs and lows. Okay, see, whenever you see there is a fair value gap, right, and uh, price formed high inside a fair value gap. Any high inside a fair value gap is intermediate term high, right? But let me explain here. Just a sec. See, there's a fair value gap here, right? And price is retracing back to this fair value gap. So this, let's say this is a high formed, but this high also is my potential intermediate term high. It's not confirmed yet, right? Again, let's say price again moved higher inside the fair value gap. So this high also is my potential intermediate term high, unless and until price does a small market structure shift. If price does a small market structure shift here, then I can say this intermediate term high is confirmed, right? And we can move lower. So this is what I mean by here. See, this high is a potential intermediate term high. It's not confirmed yet. Okay. So when price actually came down and broke this low, there is a small market structure shift. So that this is what this at that moment of time you can confirm this as an intermediate term highs. Okay. Let's go and see some examples of this, because this is very, very important. Why I'm saying so, I will let you know, but this is very important. This is gonna be like game changer for you. See, sorry. See, let me remove all the drawings. There's a fair value gap here. Okay, and price is moving towards this fair value gap, right? But see, at this moment of time, this becomes a swing high, right? But this is not confirmed yet. This intermediate term high is not confirmed yet, right? So how do you confirm this? Whenever price break this low, okay, this swing low, then we can confirm this as an intermediate term high. Okay, right? It didn't break. What happened? The price is getting many highs. Also, there is one more high also, but this is also not an intermediate term high, right? Again, you see price also get one more high here, right? This is also not an intermediate term high. It is potential, but it's not confirmed yet. How do we confirm? Whenever price break below the low, swing low, but it has to be body closing, not by wick, right? So whenever price still you see there's one more high, price is going to create, but still there's no sign of intermediate term high, and there we go. So at both this moment of time we can confirm the highest high, which is inside this is the highest high. This becomes my intermediate term high. This is how we're going to confirm. See, again you see here this is a fair value gap, but in this case price there is only one swing high, so that becomes my intermediate term high. Let me remove all the drawings. Okay, here, there we go. This is a fair value gap, and whenever price taps this fair value gap, we got tapped and price moved lower and broke this swing low. So it can say, you can confirm this as a intermediate term high. Okay, again this can be intermediate term low, and price broke this intermediate term low, the order flow got changed. Oh, this is gonna be amazing. See, Again, see what I hope this is clear. Like what I actually mean by intermediate term highs and lows. Okay, so this is your potential intermediate term high, and this is my intermediate term. Whenever price breaks this low, this becomes the confirmed intermediate term high. Let's move ahead. Okay, see this the example. The example is good. Price move lower. There's a fair value gap. There's a fair value gap inside formed. Okay, just there's a fair value gap here, and there's a fair swing high here. But you see, there's a no structure shift. That means this is a potential intermediate term high. Right. Again, what happened? Price moved higher. It stripped this high, and price broke this low. See, there's a market structure shift here. So it means what? This intermediate term high is confirmed. Now let's move ahead. So how do we know? How do you know by using intermediate term highs and lows? How do we know that by using intermediate term highs and lows, the order flow? Okay. How do you identify the order flow? By using this method. Come back and see. In case of bullish order flow, you will see price will create intermediate term lows. Let's see. Price is getting intermediate term lows. Right. Also price is getting intermediate term lows. So whenever you see price getting intermediate term lows, it means what? The order flow is bullish, simple. And in case of bearish order flow, whenever you see price is creating intermediate term highs, see price is creating intermediate term highs, it means what? The order flow is bearish. It can be simpler than this. Okay. So what I actually mean, let me explain on the charts. So what actually price does? Price will reject the low. It will break the high, right? And whenever price break the high, it will create a fair value gap at the high. Price will come back and it will fill this fair value gap and move higher. And this low becomes your intermediate term low. And whenever you see price getting such thing happening all the time, price will go high and break the and it will create a fair value gap. So this low becomes your intermediate term low. And whenever you see price keeps on creating intermediate term lows, higher, matlab, see there's intermediate term low here. Again, it created higher intermediate term low, higher intermediate low. It means what? The order flow is bullish. Also, the correct examples of Euro USD. If you go and see, let me remove all the drawings. Let's go to the current time frame. Remove all the. Okay, let's go to the daily. If you want to see, see what is happening. Okay, in this case, a bullish order flow. You saw right. You saw right. This is a bullish. This is what price formed an intermediate term low here. Again, there is intermediate term low here, right? Intermediate term low here. Okay, but still not confirmed yet. But whenever price broke the low, intermediate term lows got broken. The order flow becomes bearish, right? Until now, the order flow is still bearish. Let's go to the chart examples. See here. Bearish order flow examples of the order intermediate term highs and lows. See, there's a fair value gap. This is an intermediate term high. This price is getting intermediate term highs. It's not breaking this highs, right? That's why the order flow is bearish. Price broke the low and created a fair value gap here. This becomes a intermediate term high again. Again, we move lower. Price have this fair value gap here, and this becomes our intermediate term high. Sorry, here also there is a fair value gap. So this becomes a intermediate term high. Yes. So this is how you're gonna see the bearish order flow. Again, you see the example of bullish order flow. Price is moving higher, came down, fills this fair value gap. So this becomes our intermediate term low. Again, moved higher, came back. So this becomes our intermediate term low. So see this how price is respecting this intermediate term low. It's not breaking. Right? Whenever price breaks this intermediate term low, it means what? The order flow is likely to get changed. Right? Again, we moved higher. Price created a tiny fair value gap here. It got filled, and we moved higher. Again, price broke the high. We came down. There's a fair value gap here. Right? It got filled. So this becomes an intermediate term low. Again, we moved higher. Right? Again, there's a small fair value gap here. Price filled this fair value gap and we moved higher. See how price is getting intermediate term lows. Right? So whenever you see price getting intermediate term lows, it means what? it means the order flow is bullish. Now let me give you some bonus tips that how you are gonna use this concept in your trading. The first important bonus tip to keep in mind is that all the rejected highs and lows and the intermediate highs and lows are strong highs and lows. This is important point, right? So whenever you see this, right, come back, you saw, right? So let me remove all the drawings, right? So you see there is all these lows, right? These lows are the strong lows, right? And whenever you see this, all these highs are the strong highs, all intermediate highs. And if you come back and if you see this one, all these rejected highs as well, this rejected highs, right? They all are the strong highs and lows. These rejected highs and lows or intermediate highs and lows are strong highs and lows, right? So if this is a strong highs and lows, then you can put your SL there, right? So this is the important point. Why? Because whenever you take a trade, right, you are confused where I'm gonna put the stop loss. Maybe it will come and it will take my SL, but this is the mechanical way. This is the mechanical way to put your SL all the time at rejected highs and lows or intermittent highs and lows. And believe me, right, you can go and backtest, but I have already backtest enough. Believe me, if you are in your trade, you are right. If you are right, and if your stop loss is at the rejected highs and lows or the intermittent highs and lows, you are not gonna get stopped out. Okay, if you are right, and if you are wrong, you'll get stopped out, and market will not gonna go in your favor, right? So you're not gonna go and regret. This is the important point which I like to mention. You should always put this, important point in your notes, okay, with a bold font, right? This one, this rejected highs and lows or the intermittent highs and lows are the strong highs and lows, and these highs and lows are the best place where you can put your stop loss, right? Whenever you take a trade, that's the best. You will not, from now on, you will never be confused. You will never be skeptical about putting your SL anywhere else. If you follow this, everything is gonna be all right. Now let's move ahead. The next important bonus point to keep in mind is that all the rejected highs and lows or the intermittent highs and lows can be rejected once more if there is a higher time frame favorable gap. This is extremely important, right? Now what I'm trying to say, let me explain on the charts itself. Okay, let's say the order flow is bullish in 4-hour time frame. Let's say the order flow is bullish in 4-hour time frame. Low is getting rejected and high is getting broken. So what I actually told you, that these lows are strong highs and lows, right? So it means what? If these are strong highs and lows, it means what? Price should not come again and take out this low and move it higher, right? So, but there is a certain case where you will see this can happen. When it is going to happen? Let's say we are on the 4-hour time frame, but there is a fair value gap below this low in daily time frame, right? So there is a possibility it can happen that even rejected highs and lows or the intermediate highs and lows can be rejected, right? Again, I'm coming back. Again, I'm saying, let me explain with examples. See, the order flow is bullish. So, okay, right now the order flow becomes bullish. So, whenever you see, just now I told you that rejected lows are the strong highs and lows. So this low is a strong low, right? Price will not come and take out this low, but there is a certain scenario or certain case price can do this thing, let's say this time frame is a 1 hour time frame, right? We are looking the chart in the 1 hour time frame, but you see there is a 4 hour fair value gap just below this, right? There's a 4 hour fair value gap just below this rejected low. Then there is a likely possibility that price can move higher, right? See the examples. Let me show the examples. I did not found while I was making the PPT, but you will see this. Let's go to this gold and we will see. Because let's start with the weekly time frame. Okay, come back. Oh, beautiful example. See. Now, guys, attention here. Okay, please, with full attention, look here. This is what? A intermediate term low, right? This is an intermediate term low, and this should be what? Price should hold these lows in order to price to remain bullish, right? So, why it is intermediate term low? Because price broke the high, right? So this is a strong low as well. So this is my strong low, right? This is my strong. Okay, just a sec. Now here, okay, this is my strong low. Okay, let me write it down here. This is my strong low. So if this is a strong low, then price would not come, right? Take out this low, right? But what did I told you just now, that whenever you see, then there's also a possibility that all the rejected lows or highs can be rejected whenever you see there is a higher time frame fair value gap just below it, right, or above it. Now come back here. So this is a fair value gap. We are in the weekly time frame. See here, we are in the weekly time frame. This is a weekly time frame. So this strong low can be also rejected. Can be also rejected when there is a monthly, like what are the time frames higher than the weekly time frames? Monthly time frame, 3-month time frame, okay, 3 weeks, 4 weeks, 1 year, right? So these all are the time frames which is higher than the weekly time frame. So whenever there is a fair value gap higher than the intermediate term lows time frame, then there is a possibility that price can reject this low. Okay, now see this example. Now let's go to the monthly time frame. See what do we have in monthly time frame. It's a beautiful example. Just below this strong low, we have a fair value gap, right? This is how I predicted the move. This move I also called in the Telegram. Okay, so this is a strong low, and this is a strong low in the weekly time frame. Go see, this is a strong low in the weekly time frame, but or the intermediate term low in the weekly time frame. But this can be rejected. Why? Because there is a fair value gap in monthly time frame. Why monthly? Why not 4 hour and 1 hour? Because monthly is higher than the weekly time frame. That's why we always look for the higher time frame, right? So there is an important concept also, that higher time frame fair value gaps, higher time frame fair value gaps will stop lower time frame fair value gaps to get filled. But this is a different topic, but this also comes under this only, right? So you see this this strong low here, right? And in weekly time frame. But if you go to the monthly time frame, there is a fair value gap, right? There is a fair value gap. So there is a high possibility that we can reject this low. And see what happened. If you go and see, there we go, we got rejected, right? See how price rejected this low, strong low, and eventually got tapped this fair value gap. This is beautiful, right? It's amazing. Okay, so keep in mind, this is the most important point of the session, because you will see most of the time you can identify the order flow, because you know that whenever price is getting intermediate term lows and highs, what I told you, when we become bullish, if you see, this is my, at this moment of time, price broke the intermediate term low. It means what? We can become bearish, right? But we should not become bearish. Why? Because there is a monthly fair value gap just below it. So there is a high possibility that price will reject that strong low and move higher. Okay. That's the most important point of this session. Now move ahead. Let's take the example. I just shown you the examples. So if you see, there is a strong low in 4-hour time frame, right? This is a strong low in 4-hour time frame. Price moved higher, but there is a fair value gap in daily time frame, which is higher than the 4-hour time frame. So price will again, there is a high possibility that price can again come back and it will reject the low and move higher. So you should not become bearish here, right? Whenever price is doing. That is the important point to keep in mind. Now the third method. This is easy, pretty easy. Third method is, first method we know that first method is that what? Price is rejecting highs and lows. And second method is using intermediate term highs and lows. And the third method is what? PDR is being respected and disrespected. And which PDRs I am talking about? We will only be focusing on fair value gaps and the order blocks, right? We're not gonna go and talk about all the bullshit PDRs that ICT have discovered and taught us, right? All the implied fair value gaps, breakaway gaps, these are all are nonsense. We don't need those things, right? Only these two important PDRs are important: fair value gaps, order blocks, and highs and lows, and sometimes breaker. That's all, nothing else. So whenever talking about PDRs or key level, I'm talking about fair value gaps, order blocks, and highs and lows. That's all. Now PDR is being respected and disrespected. How do we know? Let us use this method to identify order flow. So in case of bullish order flow, what will happen? All the down close candles should support price. It means what? So if the order flow is bearish, it means all the down close candles should hold the price, right? And all the bullish fair value gap should be respected and bearish fair value gap should be disrespected. It is pretty easy. Now let's see some examples. Okay. You see here, in case of bullish order flow, price is respecting fair value gap, bullish fair value gap, moving higher. Again, respecting bullish fair value gap, moving higher. Respecting bullish fair value gap, moving higher. Also respecting this order block and moving higher. Right. So this is a hindsight example. Let me go and explain in the charts. Just keep in mind this: down close candle should hold the price, and the bullish fair value gap should be respected, and bearish fair value gap should be disrespected. That's all. In case of bullish, let me explain the bearish one as well. So bearish one is the opposite of what I've taught you. So let's go to the chart on. Let's go to the chart. Let's go to the Euro USD, and let's start from. Let's go to the 4-hour time frame. Just have. You can also. Let's use this only for any. Let's start from this. This is an easy one to explain. That's why I'm choosing this. Series. So in case of bullish order flow, what will happen? Price rejected this low, broke the high, and what happened? Price disrespected this fair value gap. Right. Price disrespecting a fair value gap, creating a bullish fair value gap. It also created a bullish fair value gap here. Right. So it creating a fair value gap, and price filling that fair value gap. It got filled. Fair value gap got filled. So whenever you see a down close candle, important point to keep in mind, whenever you see a down close candle in bullish market, so this down close candle should be immediately engulfed. Not immediately, it can take 1 or 2 candles, but not more than that. Right? Better that if price is engulfing immediately, it means what? The order flow is extremely bullish. Right? You see, what happened? Price immediately engulfs this bearish candle. Right? So this becomes what? A bullish order flow. So this also, price should also hold this bullish down close candle. So price should hold this down close. It means what? Hold means what? It should respect this. Right? Price came back, tapped this, and it moved higher. Right? Whenever price moved higher, it also created a fair value gap. And there is a down close candle. So yes. And what you saw? Price is respecting bullish PDRA, bullish PDRA, and disrespecting a bearish PD array, it means what? The order flow is bullish. Again, we came back, we tap this bullish PD array. It means what? Price is respecting the. See again, price formed a down close candle here inside a discount. So you saw price form a down close candle. So price would immediately engulf this, right? Like this. 1 to 2 candles is enough. Right? Again, we moved higher, and then we tap this key level. And this is how we're gonna use. If we go to daily time frame, let's go to daily time frame. You can see this example as well. What happened? We were bullish at this moment of time. See, it looks extremely bullish. Okay, but when do we price is started now? We don't know what is going to happen, right? We have disrespected this fair value gap. We move low. Okay, again we are respecting this bearish fair value gap. It means what? Price started respecting bearish fair value gap and disrespecting bullish one. Okay. Again we came to this fair value gap. Price respected this fair value gap. We moved lower. It means what? The order flow is bearish. Okay. And also we are disrespecting this. So disrespecting bullish PD array and respecting bearish one. That means what? The order flow is bearish. See, and this was my fair value gap. Okay. Now if you see this, what I told you, that whenever you see a bullish candle, price should immediately engulf, right? So it got engulfed immediately, right? Again we saw a bullish. Now we are in the range. We are moving lower. We are moving. Still we are in the range. What is happening again? Price started rejecting highs as well. Okay. So rejecting highs, respecting bullish PD array, bearish PD array, disrespecting this bearish fair value gap, right? So it means what? The order flow is bearish. We are still keeping moving lower. See what? See this. This is magic. There's a bullish candle and price immediately engulfed. So it means what? The order flow is still bearish, right? We're still bearish. We have disrespected this fair value gap order block as well. So we are disrespecting the bullish of PD array and we are respecting bearish PD array. So it means what? The order flow is bearish, right? Okay, let me have some water, then we're gonna move ahead. Just a sec. Okay, let's move ahead. Now, from all this understanding, see again, take this example. These are the down close candles. Price closed above this down close candle. So this down close candle should support the price, right? Again, price moved higher, created a fair value gap. Also, this down close candle are there. So it should support the price. Price just fails to fill this. We moved higher. There is a down close candle, so it should support this price. Okay, supported this price. Again, we moved higher. Down close candle, price supported the price. Order block supported this price. We moved higher. There is also down close candle here. Okay, and we price supported this, and we moved higher. So in case of bearish order flow, all the down close candles should hold the price, and the up close candle should be disrespected. Immediately. Okay, before going to the market profile, I hope these things are much more clear, but I will go and club everything together, that this intermittent highs and lows, respecting. Hello. Yes, bro. Do you have any doubt, or shall we move ahead? Let's take this example of you can see this. We are in extremely consolidation. Okay, let's try to understand the order flow. by using all the methods we have learned so far. Okay, see this. In case a bearish order flow, what happened? How do you identify? Let's say we are at this moment of time, right? We don't know what has happened next. Then how do we know the order flow? So how do we start? We'll see whether price is creating intermittent highs and lows or not. See, price is creating intermittent highs and highs. There's a fair value gap. Price creating intermittent highs, and so far this did not fill this. So, and also we can say that price is disrespecting this bearish PD area and respecting bullish one. There was a bullish fair value gap here, so it got disrespected again, and here we can see there is a price. This is third method, right? We club everything together, then we'll have the better idea. So you can say that price is also forming intermittent highs, okay, and it means what the order flow is bearish, and we're gonna take the trade in the direction of the order flow. Okay, again you see there is a fair value gap here, so we can anticipate price to reject that or forms intermittent highs and lows. So let's see. There is a why I chose this fair value gap, not this, because this comes in premium and to be honest. Okay, so if you see there's a fair value gap and price should immediately engulf. See this, there's a candle, it's just tap this fair value gap and you got immediately engulfed. So this becomes my intermediate highs. And also you can see that this is also a rejected high. Everything clubs to, if you use everything together, now it will like sync together. It is also getting intermediate highs, respecting bullish bearish fair value gap, disrespecting bullish one. That's all. And you see why it got rejected against, because there might be a fair value gap higher than the weekly time frame, so it can happen, no issue. We again move lower, and we also created a fair value gap, maybe a gap, so it should hold, or it should disrespect. Sorry, it should hold that, or this down close candle should hold the price, right? So it is holding, and we are moving low. Again, this is the down close candle, price fills this fair value gap, we are moving low. It means what the order flow is bearish, right? I got it. Just important point to keep in mind. One more important point. Okay, this is an important point. This is final point. Let's say we are in 4-hour time frame, right? Let's say we're in 4-hour time frame. So and the order flow is bullish in 4-hour time frame. Okay, how do we know that the order flow become bearish in 4-hour time frame? And how do we know that when order flow start becoming stop becoming bullish, right? So pretty simple formula I have discovered, or now I am using that. Using that 4-hour time frame, 4-hour order flow will remain bearish until it reaches the time frame higher than the 4-hour time frame. Okay, what I actually mean, let's say the 4-hour order flow is bullish, so 4-hour is bullish, so how it will remain bullish when it reaches, until it reaches the time frame higher than the 4-hour time frame. So it can be daily, so there is a daily, let's say there is a daily PD array. So this, now we don't know, now here we don't know whether this order flow will remain bullish or not. Here it will be neutral, right? Maybe I have some examples to show. Okay, I guess I don't have. Okay, let me show some examples, but hope this is the important point, because let's say we're in a daily time frame. In daily time frame, the order flow is bearish, right? And the order flow is bearish, but how do we know that the order flow will stop becoming bearish? Because if you see, price has reached a time frame higher than the daily time frame, so it can be weekly, right? So if price tap this week, if comes to this weekly key level, then at this moment of time we don't know. As here we will be neutral, our bias should be neutral, they should not form a bias here, right? Here we will wait for further confirmation for price to give us to either to remain bearish or to become bullish, right? Let me share some examples, because this is the most important point. Let me remove all the terms. Here, if you see this, let's take this example as well. Here, it's a strong move. Let's go to the different chart to explain you. We are in the consolidation. Okay. Let's use this fair value gap to explain. So there is a fair value gap here. Okay. And let's go to the one. This is a weekly time frame fair value gap. Let's go to the 1 hour time frame. Okay. Now you guys tell me, in 1 hour time frame, the order flow is bullish or bearish? It is bearish, right? Price is rejecting highs, right? And also rejecting, getting intermediate. So this is your intermediate highs. It's also intermediate high. So it is respecting this. So it means the order flow is bearish, right? Now, let's see. Now you saw that price just broke this intermediate high here, right? So it means what? The order flow is gonna be bullish, right? But since like how much time it will remain bullish, or since how long it will remain bullish? See, this is the point I'm trying to explain right now. Again, if price came back, it will reject this low and it will move higher. Okay, pretty easy, bro. Now you guys know how to trade turtle soup. This is turtle soup. Okay, now you move higher. Let's say it's moving higher or not. We are in the, again, see, we are moving higher, right? What happened? You see, price is rejecting lows, right? It means what? The order flow is bullish, rejecting lows, breaking highs, right? This is our intermediate lows as well. So moving higher. See, the order flow is bullish in what time frame? The order flow is bullish in 1 hour time frame. But if you go to the daily and weekly time frame, the order flow is bearish. Perfect. Let's see this. If you go to the weekly time frame, the order flow is bearish, right? If you go to the daily time frame, the order flow is bearish, right? But if you go to the 1 hour time frame, the order flow is bullish. So this 1 hour order flow will remain bullish until it reaches the PD area, or until it reaches the fair value gap higher than the 1 hour time frame. So what are the fair value gaps higher than the 1 hour time frame? It can be 4 hour, it can be daily, it can be weekly. So right now this is my weekly fair value gap. So at whenever price taps this weekly fair value gap, at this amount of time will not become bullish, will become neutral, right? Now move ahead. See again what is happening. Again, let's just wait and watch. Came back, it will reject the low, I guess, and again it will move higher. Let's just wait and watch. See, it can again come back, but eventually it will tap that 1 hour fair value, weekly fair value gap. Okay, and you will see that the order flow will become. See, at this moment of time, you should not be bullish in 1 hour time frame. Okay, should not be bullish in 1 hour time frame. There was no intermittent highs and lows are there. This is a fair value gap which was there here. Let's go to the 4 hour time frame to have better vision. Yeah, perfect. Gorgeous. It came to fill this fair value gap and move higher. But here will not be bullish. Okay, you know why. And here only price become bearish. From there, then only it become bearish. We were in consolidation because as we are coming to the end of the year. But yeah, this is how it moves. See, from why price move become bearish here? Because there is a higher time frame PD array. In which time frame? Weekly time frame. So if you see in the charts, in this retracement leg, the 1 hour time frame was bullish, but the higher time frame was bearish. But this 1 hour time frame become bearish where? Whenever it taps the higher time frame key level, higher than the 1 hour time frame. So if you see a 15-minute fair value gap here, and it's not that useful for us. Hope this is the important point. This important point is clear to you guys. That should be bonus point number 3, right? I forgot to add that, but that should be the bonus point number 3, right? Now you guys know that when the order flow, how to probe the order flow, what are the methods we're gonna use, where to put the stop loss, right? When to identify rejection, what is rejection, what is break. Now let's move ahead and now let us understand what is market profile. So basically there are 4 types of market profiling. Today I have uploaded one video on YouTube. You can go and watch that video also. It's all about market profile as well. But I'm going to explain the important points to keep in mind. That there are basically 4 types of market market action, you can say, or market state, right? So you can see sometimes market will be in range, sometimes market gonna expand, sometimes it is gonna retrace, sometimes it is gonna reverse. But we don't have to predict, right, when price is going to retrace, when it's going to reverse, or we just have to predict this expansion. That's all, because this is the high probability market state to put your bet in. Okay, so that's all. So to trade the expansion, there's a lot of ways. The total soup, there is CRT, there is a higher time frame key level. But right now I'll just explain you some basic idea about this market profile thing. Okay. So if you see how it actually looks. So whenever you see price is in ranging, it is ranging, right? It is in consolidation. So what it actually means what? Price is in consolidation. Price is in a tight range, right? And whenever consolidation ends, price is gonna go and expand higher, right? And whenever price expanded a lot, price is gonna go and consolidate, right? So you have to keep in mind that whenever there is a consolidation, there will be an expansion which is going to happen, right? That's why we say that the consolidation is the mother of expansion. If there is no consolidation, then there is no expansion, right? So, and when there is expansion, there can be a consolidation. So whenever you see price is expanding higher or lower, then you can anticipate some consolidation, right? And this is the state of market where you should avoid trading, right? Again, what price can do, it either retraces, but you do not have to predict the retracement. You have to mark the key levels where you are interested to take your bet, like this, and then you trade the expansion to the downside. Okay, you do not have to trade this expansion, right? You do not have to trade this expansion, this retracement, or you don't have to trade this consolidation. You just have to trade this expansion. So whenever again you saw the expansion, right, then there is a possibility that price can reverse. Again, I'm saying you don't have to predict the reversal, right? Let price reverse first. So you saw the price has reversed. It means what? Price is rejecting lows and breaking highs, right? So price is already reversed. Then you start trading in the direction of the order flow. Continuation trades. All trades should be the continuation trades. Again, so there is again price expanded higher. What it can do? It can retrace or consolidate. So if it is consolidation, you avoid trading consolidation. Again, you can wait for your key level. Let's say you mark this key level. So price can retrace, says back to this key level, and it can again expand higher. So you do not have to trade. You have to avoid this condition. This is where you guys loses all the money, in this retracement leg or in this consolidation leg. There might be some situation you will come across that will mark your key level where you are interested to long or short, and price will not come back to that key level. So it's okay, no issue. And do not try to predict reversal, right? Do not try to anticipate reversal. See, if you see Bitcoin, it is continuously moving higher, and when you try to trade the reversal, you are gonna get cut, and you're gonna get stopped out multiple times before blowing all your money, right? So do not have to anticipate the reversal when it is going to happen. Let the reversal happen, and then you can trade in the direction of the reversal or the order flow. Because I'm not gonna teach you the all the bullshit about this market profile, but this is what you need to know. One important point to keep in mind is that whenever you see a expansion, there has to be a consolidation. So if price expanded a lot, you can anticipate some consolidation, so you avoid trading in this condition. Okay, whenever there is a retracement, you will do not trade the retracement, you wait for price to hit the key level, you trade the expansion. That's all, right? There can be some people say there is a manipulation. Yes, there can be manipulation, but manipulation is itself expansion. So I do not not trying to complicate these things. Okay, all I will say that if you don't have any basic idea about this thing, you can go and watch the video today I have uploaded, because that is pretty easy. But that video is not, you do not need those videos. I just uploaded because that's an old video. But yeah, this is all about market profile, because there are four market state, we are, there can be range, there can be expansion, there can be retracement, there can be reversal. All you have to keep in mind that whenever you see a consolidation, then you will anticipate expansion, right? It can upside to the downside, but you don't know where it's going to expand. You're gonna learn that how to anticipate all those things in the upcoming sessions. But yeah, that's all for today, I guess. And look, I will keep some assignments, some tasks for you guys. Today we have learned about order flow and the market profile, right? So so what is your task? What is your assignment? Your assignment would be practicing all those concepts in the charts. Try to identify the order flow and send me all your charts in the Discord, right? I will go and I will see each one of your charts and try to see whether you guys are doing right or wrong, right? And you watch this video again, make your notes, right? And complete all your assignments. If you have any doubts, write down all your doubts in a piece of paper, and tomorrow we are gonna do a doubt session regarding this session, right? So this is gonna we are gonna do. We will do a session, and again the next session we will do the doubt session, right? This is how we're gonna proceed. Hope everything is clear. At least I'm expecting 5 to 10 assignments, like the examples of the order flow. But how do you anticipate order flow? How do you measure order flow? How do you look order flow? That's all. I hope you guys everything is clear, right? Anybody have any doubt regarding this? You can go and unmute yourself one by one, and they can ask me. No issue.
So actually, I have a doubt.
Yeah, go ahead.
Bro, you told that we can place SL on intermediate time highs and lows, right?
Perfect.
When we came to know that it is an intermediate term high and low, but already the expression has been done, and how can we capture this?
You're not getting my point. Okay, see this. See this. This is your intermediate term highs and lows, right? Let's say this is your target. You got a small structure shift here, so there will be time price will retraces here. You can take this trade and put a stop loss here. This intermediate term low. I can move higher. Okay. I can show some examples of the BTC trade. Okay, BTC trade. Let's say. See, this is a the reason why. See, if you go and how can I show? Yeah. Now come back to maybe here. Yeah. See, if you go and see this chart, not here. Just a sec. Where was the? See this. Why I to chose this high? Because this is an intermediate term high. This expansion is already happened. It's all there's no, but there will be retracement, right? So when I retraces this to the key level, this high is important. This is where you should put your stop loss, because if you are right, then it will not get you will not get stopped out. If you put a stop loss like here or maybe here, then there might be a chance you will get stopped out. That's what I'm saying. You got the idea, right, bro? Hello?
Yeah, bro, got it. Yeah.
Okay, so You guys go and watch the video again and write down, or make your notes, write down all your questions and doubts. I am expecting some doubts from your side. And tomorrow we will have the session again, same timing, and we will do the doubt session regarding the today's session. Okay, that's all. And enjoy your weekend and holidays as well. See you tomorrow.